Hello, everyone, and welcome to Preventing Fraud Without Compromising Customer Experience, where today we'll be taking a deeper look at fintech services. We'll be discussing how the fintech industry can accommodate their growing user base. And I'm April Weber, customer marketing expert at Infobip. Today, I'm joined by Bill Genovese, CIO advisory partner at Kyndryl, and Wayne Brown, managing partner of the Walker Group. I'm going to let you guys introduce yourselves first to begin with. So, Bill, you want to start?
Sure. My career has spanned, depending on when I start the clock, 26, 27 years globally. I lived and worked in 6 countries, worked in large IT providers such as IBM, management consulting, big 4 firms such as KPMG, and Huawei Technologies in China. I've also been a 4-time CIO and CTO for startups and blockchain companies, real estate. I've been very active advising as a mentor and a coach, startups with New Chip Accelerator out of Austin. Very excited to be here and looking forward to the discussion.
Great. Thanks, Bill. And Wayne, do you want to start and introduce yourself?
Sure. My name is Wayne Brown. I'm the managing partner of the Walker Group. My background have been involved in product development and product management for over 30 years. Where I worked on building digital solutions for consumers as well as businesses. I spent time at MasterCard, FIS, Deutsche Bank, and Citigroup, and where my focus was building products for large multinationals. For the last 15 years, I've led the Walker Group, which is a fintech boutique consulting company, where we work with fintechs, their various lifestyle, pre-seed, seed, Series A, Series B, a number of fintechs where we're able to help them scale, grow, and partner with banks. So some of the focus of what we're doing is working with large banks and how they partner with fintechs. So as a previous product manager, and I still deal within product, really kind of understanding what's needed from the consumer's perspective and really what it takes to build those solutions into the marketplace.
That is great. And I appreciate the introductions, and I'm excited to get this conversation started. We have it seems like a great background of experience between the two of you. And with my focus on customer marketing, I think this is going to be a great conversation. So let's get moving. Let's start with the question, topic number 1 that we really kind of want to dive into first. How has the push for personalized digital services impacted fintech? And then as a second add-on to that, have customer expectations changed in the last 18 months? I know my opinion coming from customer marketing and how that looks, but Wayne, why don't we start with you and let you take that topic right now?
Sure. Yeah, I think it's a very valid question. You know, when I think about a personal digitalized solutions and how they have increased over the last 18 months, my answer is yes, it has. I think companies continue to focus and give attention to the expectation of the consumer for wanting a personal experience when it comes to how they engage with their websites, how they engage with products. I think a big driver to this from the digital perspective had to do a lot with AI. I think AI was a big driver to accomplish this. So when a consumer accesses a website and they put in their credentials, it's interesting because sometimes when they return back to that website that they're known, they're addressed by their name. I know sometimes when I go onto different websites to get information, sometimes I get that welcome back message, the fact that they welcome me back to the website, maybe not even knowing who I am, but the mere fact that they are welcoming me back. So, you know, when I think about what brands are doing around using technology to create this kind of digital experience for the customer, I think it's growing, and I think there's a lot more that is addressed, that's involved. I think one of the areas with the second question of, you know, what has been the expectation from the customer, I think customers really expect that. I think when their brand is able to engage with them in a very personal way, I think that builds brand loyalty. I think it also, the consumer thinks it gives them credibility and they want to engage more with that particular brand, or it has a lot to do with the experience that they're dealing with themselves. I think technology is as more technology is available, using that technology to drive this kind of personalized digital solution, I think it's only going to increase. And I think consumers are going to expect it. They're going to look for it. And I think that's going to be a differentiator from a brand that has this capability to those that don't.
Right. You know, and the brands we work with, we talk a lot about the digital experience, combining that physical experience, you know, in store and you know, in the space, and then the digital experience. So that's it's definitely what we're seeing. And we, you know, it's a nice, fun word to say digital. But Bill, do you have a, you know, a kind of perspective from your side?
Yeah, I mean, I've in my career and, you know, working in full stack technology and architecture, primarily in financial services, I would say retail banking customers first, and with startups and fintechs. You know, both are kind of attacking the physical institution of the bank and that whatever capabilities the digital institution has from two sides. The big tech players, Amazon, e-commerce giants, Google, have gotten in through the internet channels, okay, and typically gotten in the door in terms of disruption, in terms of payments, okay, and it's all about the data. And they've accelerated understanding what the customer is paying for and tailoring and contextualizing, personalizing offers based on that payment data. Now, the traditional industry has not taken advantage of that. I'm not going to, you know, necessarily throw rocks at my bank that I've been with for 20 years. Okay. But do you think, you know, they know my history? I've lived all over the world and traveled with them as a customer. Do you think they provide me tailored offers based on my experience? I've moved all over the place. And in many cases, they still had my address from 10 years ago and never proactively asked me, do I want to update it? You know, so these are interesting points. PayPal, on the other hand, I view PayPal as the biggest fintech that's well known. Okay, and they're no longer just in payments. They're offering credit. They're offering digital asset trading in terms of Bitcoin. So they are tailoring the customer experience in a very rapid, accelerated manner. Okay, in terms of getting more of that value chain in terms of embedded financial services. So.
Right. Yeah. And I think that actually brings up to the next question is how can data be leveraged to better understand the customer behavior needs? I think you kind of touched on that point and how it can be utilized to provide the hyper-personalized experience. You gave a great example. Even to add on to that and to let you, Bill, kind of take it from there is I feel like some of what you just said, a lot of times B2C companies are way ahead of actually working with consumers. Obviously in the retail space and all of that, they're actually way ahead of, if you look at the fintech space where you mentioned that they don't actually do that. So, if you can kind of expand on that and tell me, the experiences, that'd be great.
Absolutely. What we just went through for the last, 2 to 3 years in terms of the pandemic, we were all kind of cooped up inside, buying from home, working from home, getting food delivery, the sharing economy. That exploded. Okay. So I look at this as a consumer consumption model for financial services. Number one, on top of that pyramid, whatever, picture you want to kind of draw, is payments. We need to pay for things right away to get goods and services. If we don't have enough money, what do we need? We need to borrow, credit and lending. Okay. We need to do that from the palm of our hand. And we're not going to jump in our car and go down to the bank branch, which is probably closed, and wait in line, even if it is open, with masks on, okay, during the pandemic. So we need instantaneous decisions for credit and lending to borrow, to pay for things if we don't have enough money or we're waiting to get paid. Then the next areas are really around remittances, okay, sending money to loved ones, okay, quickly and efficiently. No wire transfers. I'm talking, instantaneous digital wallet, sending money across states, out of the country. Okay, so those are the three primary services, and whoever's kind of moved into that space quickly, 24/7, instantly, has kind of moved ahead in terms of acceleration for stickiness. The last area is, the last bastion, however you kind of want to put it, the anchor point, is asset preservation. Okay, deposits, okay, investments, insurance. But I would say the fintechs, okay, from a functional disruption perspective, many of them have moved into wealth management. Robinhood, Acorns, Stash, these are pretty big names. There's some bit of back and forth controversy about some of them. Okay. But they have gotten some market share. Okay. Digital insurance, insurtech. Okay. You know, so, and then deposits, you know, the big tech players have kind of had one foot in, one foot out. Google partnering with banks in terms of deposits, that never really fully came to fruition. But I think the barrier there in terms of disruption is regulatory, you know, with the FDIC and you know, so that's going to be the last mile of disruption in terms of consumption. But you can kind of see, starting with payments and credit and lending, whoever's kind of taken that data and learned about customer experience and personalized it has allowed them to kind of get into that house of the bank from the top and penetrate further down into the offerings.
Yeah, absolutely. And again, you keep leading me right into my next question. It's great. Thank you for that. It makes it easy. But just kind of addressing that, and you know, maybe Wayne, you maybe want to take this, is how can fintech organizations ensure their cybersecurity strategy supports their business objectives as well as their customers' evolving needs? Right? We talk about that, regulations. How can we kind of move forward?
Well, you know, that's a very good question. And one of the things that we see, it's not a shortage of regulations that's going to be really necessary with regards to fintechs, as well as what we see that banks are involved in today. You know, when you're dealing with consumers' fund access to money and so forth, it's really important to make sure that this is taking place in an environment that's regulated. We also want to understand that there's risk involved as well. But I think a core consideration for a fintech to build products that's really going to have an impact on people's life and provide value, I think using technology to accomplish this as a core driver has a lot of benefits. But I think, and I think about this a lot with regards to a cybersecurity strategy, working along with credit unions with solutions that they can put in place to address cybersecurity is something that I work with. So this is a very important question. What we see today that people are concerned about are cyber attacks. They're concerned with risk. They're concerned with all these threats. So one of the things that a fintech organization has to make sure that they do have is a cybersecurity strategy, a cybersecurity policy. They need to make sure that this is wrapped up and that this is actually executed against. Now, when you look at that, I look at two different things. I look at the fintech and I look at what a consumer expects. So the regulatory requirements that are out there for that fintech is going to be important. And I think that cybersecurity strategy needs to be communicated. It needs to be vetted out. It needs to be structured in so that a way that the consumer or the customer understands that their data is secure, that their data is that they are protected with regards to what that they do. So when the question mentions the business objective of the customer, I think their business objective is that they want to transact in a safe, secure environment. And so when they know that that entity has a plan, that they've communicated what they have an understanding what that policy is, or they understand what that framework that they're going to be transacting into a secure environment, I think that's very positive. I think right now that we're in an environment where cyber attacks are a threat, and that there's a concern about that. But I do feel that there's a balance between that and having that policy, executing that policy, and what the consumer expects from that brand themselves. And so I think it's a balance, but I think it's necessary.
Yeah, absolutely. I mean, Bill had mentioned earlier that it's this, we need this immediate, we need this immediate interaction, the way we want to engage, where we want to engage, and how we want to engage. For instance, you know, I often am using Apple Pay to very quickly transact money to my daughter. It's one of my daily things. Hey, Mom, I need money. It's the easiest for me to run Apple Pay. Just run it back and forth. I think that when you come and you look at that, there's this balance between, yes, as a consumer, we expect to be protected and we want to be protected. But on the flip side, we don't want to give up that nice, wonderful, immediate transaction where and when we want to transact. So, you know, Bill, you want to add to that as well?
Yeah, the only thing I would add is you know, if once again, from the disruptive model perspective, business and technology and operational, fintechs are disrupting the traditional industry in terms of certain functions. I mentioned earlier, payments, wealth management, okay, insurtech, and so on and so forth, okay. And many times they kind of have a walls-in perspective in terms of their cybersecurity strategy around that specific function, okay. But they need to continually realize that they need a zero trust perspective for the entire ecosystem. You know, what I'm a bit in fear of from time to time, if I use PayPal, I use Apple Pay, is there a contagion or a backdoor entrance to my bank account? Okay, well, the fintech's not responsible. PayPal, Apple Pay is not responsible for somebody sneaking in the back door of my traditional bank and siphoning money out. You know, and if that happens, are they going to put up their arms? Not my problem, man. I mean, you see my point. So it needs to be holistic. They need to think outside their functional ownership area from a zero trust perspective, because it's embedded finance and it's an ecosystem. So, you know, and they need to go through these scenarios in terms of their zero trust approach, you know, that it's no longer just walls in for their fintech enterprise. It's how they're connected to the ecosystem and what is their response mechanism, okay, in that regard.
Right. So interesting, because I'm going to go ahead and bring this. We had talked about this question, and I'm going to pull it back in because I really want to kind of move forward with this. If you look at how can tools and technologies such as conversational AI platforms, obviously they can enhance the CX experience. We know that can enhance it. How can we do that? And I wouldn't even say without creating extra workloads. I would like to say, how can we do that and bring this experience to consumers, but still in your mind, provide that protection? To your point, to zero trust, how would you suggest that when you're working with these companies? What would they be looking at holistically? Maybe some examples of what you would do there.
Yeah, you know, sacrificing the best consumer experience for protection's always been kind of a balancing act and challenge. Okay. And, you know, what's very interesting to me is you know, for lack of a better term, the experimental application of advanced cybersecurity. What do I mean by that? So I lived and worked in China for 4 years, and I was able to go into the campus coffee shop where I worked and pay for a $5 cup of coffee with my face. Okay, as a default payment mechanism. Okay, I never took out a you know, Bank of China ATM card or anything. I just smiled at the iPad looking device at the counter, and everything in the back end's integrated. Okay, but my point is that that's a little bit extreme. Okay, I mean, you know, and it's in the West, in the United States and other countries, it's a bit all over the map, whether we opt in or not for facial recognition for payments or even access into an application. It's kind of a combination between the software vendor and the hardware device manufacturer, whether we use facial ID or not. Okay, there's no tie in terms of a protectionary mechanism to transaction amount or function. Okay, there isn't. You know, and my point is there should be, okay, depending on behavioral characteristics of what that consumer is doing, it should invoke higher levels of cybersecurity that are advanced. Okay, so facial recognition can be invoked with a passcode as an example, or a fingerprint, if you're trying to send $10,000 to your daughter from your mobile device.
Right. Yeah.
Okay. You know, instead of, you know, it always being a wire. Okay. Mm-hmm. You know, but it's all kind of all over the map right now. Okay. You know, why do you have to necessarily opt in to use your face to pay for coffee, but you don't for, you know, sending large sums of money based on what you want to do and to who you're sending it to? So, I mean, I think there's a tremendous opportunity there, but my experience, this seems to be a taboo area, you know, and it's perplexing to me because I think there's a lot of opportunity here if fintechs collaborate with regulators, regulatory bodies, and the traditional industry in this space, okay, to kind of come up with a tiered approach or application for advanced cybersecurity based on transaction amount, clips, and functions.
Yeah, that's actually. Oh, go ahead. I'm sorry.
No problem.
I was just going to say, Wayne, come on.
So you know, it's really interesting because when I thought about this question, you know, with regards to technology and AI platforms enhancing the customer experience without adding existing workload, my original thought was, you know, initially it probably will, because, you know, when it comes to a new process and it's going to have an impact on the back-end systems. There probably will be an impact on workload and so forth. One of the things that I've seen consistently, however, is as that technology is rolled out over a period of time, that back-end workload may decrease or may be able to be redeployed into other areas. But I think similar to what Bill had mentioned is that time is going to tell. We're still at a beginning age where these are new opportunities, with technology. Time is going to tell as it continues to move along the maturity cycle, and we're going to see what the impact is really going to be as far as that back-end workload long term. The big thing is about automation is that it really drives, it has a direct impact on reducing costs and maybe lowering costs or reducing the expenses that were at an organization that was once handled by a workforce, a physical workforce. That may have an impact. I'm thinking of one very particular use case with regards to AI, but there's other areas as well. And I think it's from a consumer's perspective, the more that we see access to AI as a consumer, our life is easier as a result because we're able to get access and recognize in a way that we would not otherwise. But we do know also that organization is also impacted and positively in effect longer term as they can reduce costs and streamline the back end.
Yeah, absolutely. And I mean, as I'm thinking about it, and I think about how we look at the fact that increases workload for people, I also think about the fact that would that workload increase not kind of overlay in the long term of attrition for customers that actually choose to go somewhere else because that they're not available. So I think there's a balance between saying, does it increase the workload or at the cost of losing customers because they want a different experience? I know that a new user will abandon the onboarding process quite quickly if they don't find their experience quick and fluid. So there's a great example. So what can fintech companies do to avoid this situation? Wayne, you want to start with that?
I think that this is a very important point because as a consumer, and one of the big challenges is that even with all the technology that they may have available in an organization as far as the onboarding process, consumers were abandoned if they feel that this process is laborious, if they feel that it is difficult for them to navigate as a customer, if this onboarding process is not friendly, it can contribute to a poor customer experience. If they have to navigate through many different sites and all this workload that they have to do in order to onboard. So one of the things that a fintech could be aware of, an organization could be aware of, is that they really want to make this experience positive. And in order to do that, it really has to be quick to the point, less painful from the consumer's perspective so that they can engage. We find in the onboarding process, there is a number, believe it or not, in the onboarding process that abandon. So through the process, they opt out. And they opt out because they feel that maybe the information that they're asking, that's being requested of them is too personal. They may feel that they are uncomfortable. They may feel that it's difficult for them to navigate. And all those different reasons. And so really understanding what it takes to have a fluid onboarding process, maybe engaging in getting feedback of what could be some of the obstacles, because some of the barriers to this is going to be important. And I find with regards to some fintechs, what they do is that after a customer is onboarded, they basically re-engage that customer to identify what that experience has been for them, to address and get that feedback. With that feedback, they're able to work with improving the process, taking that into consideration. We have found in certain industries, especially in subscription business, abandoned rates are very high, 50, 60%. They just abandoned it, even not only just that's more so not on the onboarding process, but that's using at the checkout, more from a payment perspective. But when you look at the whole onboarding process in and of itself, there are some very specific points that I just mentioned of making it user-friendly, getting the pain points out, creating a positive experience, engaging the customer in a way that's not going to be laborious or personal. Could be some things that could be done to make that process easier.
Right. And coming from customer marketing, one of the things I can say here is that what we see often is that there's a couple things. There's multi-channel experiences and people prefer channels, right? Yeah. They prefer their own channels. They prefer to engage in those in multiple formats. So whether that is, their financial, whether it actually be, transferring money back and forth. And the other thing I can say in there is that you're looking at that too in a multi-generational aspect. So right now you've got different users that have grown up using different different areas of what they feel safe and secure in, whether it is or isn't, might be a different story, but that's what they feel safe and secure in using. So I find that kind of interesting, that we see that across, fintech, across all the verticals. But I do think that you're right. It kind of still goes back to the customer experience. So how do you think that organizations can keep security in mind as they transform these user experiences? Bill, you want to take that first, maybe?
Yeah. I mean, I would say, kind of tying also back to that last question, in terms of data privacy and the difference between, using, kind of picking on the customer onboarding scenario or use case. Okay. And, as the traditional industry and some fintechs to some degree, I've seen some examples, they've automated, what they're doing is not digitalization, it's more digitization. So that same paper, okay, that was required to onboard is now in a quote unquote digitized format for customers to scroll through screens, but they're still doing the same thing. Okay, I think where the differentiation comes in, and what makes me excited when I onboard, is there's some level of the company knowing and harnessing previous information on me that's public, that is secure, that's pre-populated. Okay, that's where the secret sauce is. Okay, because I know, okay, it's not, and I'm not always reacting. As an example, the consumer's not always reacting, well, how in the world did you get this information? It's so private. It's it's okay. It's public information. Oh, great. Gee, somebody realized that I've had this out there for 25 years and they're using it and they're not making me rekey it into 10 forms online again. So it's these little things in terms of stickiness that reduce the friction. Okay. But it's not kind of going into the PII aspects of, you creating a reaction. Well, gee, that's kind of spooking me out how you found that out about me, that I own this make and model of car in 1979 or whatever,
right.
But some of it's related to the security aspects when they ask you questions. Have you lived in this address? Have you owned this car? Okay. They're obviously harnessing and they're tapping into public records. Okay. Well, if they can do that from a security compliance perspective, reuse the information. Okay. And then validate it. That's what I'm saying. And I would think most consumers are okay with that if it's used appropriately.
Yes. Right. I know we find that most consumers prefer to actually be engaged with in that format over security because they assume that it's secure. Yeah. And that's that thing. We prefer this, immediate, nice kind of, as you said, like, oh, they showed me this information because they know it, but they already assume it's secure. So I think that's kind of an interesting aspect there. Wayne, do you have anything to add to that one?
No, I do, in a sense that, yeah, so I can go back to the early days of digital banking and payments, where it was a very new industry. And we were concerned at that point on security and risk and fraud. We have come a long way. And billers or companies in their online channels have really communicated to the consumer what they are actually doing about fraud or risk or all the different things. And I was looking at one telco site before this meeting, and I was looking at, they have a particular page just talking about that they're what they're doing about security, vulnerability, risk. All of this is communicated to the consumer that they can just click this particular page on their website, before they even make a payment. And so when it's this type of information that's communicated, I think that this is what companies are doing so that they could make consumers at ease and let them know all the different things that they're doing, that they're being protected. So communicating. And I think one of the challenges, because we as consumers are being, would control our cell phone and all of a sudden we may not have an Amazon account, but our Amazon account is hacked. We may not have a PayPal account. Oh, someone is accessing our PayPal. This afternoon, I got a telephone call from my bank. It was spoofed, and they told me that that there's $18,000 that's at risk. Now, it's probably the wrong telephone number, and it's if I were to call that number, it wouldn't exist. But I'm saying that all as consumers, how we are constantly bombarded with information, some misinformation. And so when billers and corporations communicate what they're doing around fraud, around security, it helps makes consumers, puts them a little bit more at ease, because many people are still concerned, but they want that confidence from their merchant, from their corporate, from their biller, from their customer, of what they are doing, and how this is communicated can certainly help a consumer with regards to easing them or make them feel comfortable or at ease that they're doing something as opposed to nothing, and communicating that.
Absolutely. You know, in coming up with that, we know that, you know, there's many stats out there that say people will give up their personal information in order to have a more convenient, personalized experience. So we know we can garnish that information from customers and clients where needed. But what are examples of authentication methods that are both customer friendly, but also effective at fraud prevention? I know we talked earlier, obviously biometrics was in there, but you guys want to kind of address that a little bit? Bill, you want to start?
Yeah, I mean, my experience, and I did touch on this a bit, you know, living and working in China, and, you know, in a macroeconomic and societal level, that's a perfect example. You know, how this country, largest population on the planet, leapfrogged from a largely agricultural economy to a leader in technology, you know, so much, you know, to the point that the West is very alarmed at that. Okay. And the way that it happened was, you know, applying technology securely and safely for consumers and convincing them, influencing them to give private information, facial recognition, so on and so forth, and weaving that into the plumbing of embedded finance in the back end through everything. So, you know, if you're a farmer, your family was a farmer, then all of a sudden you're getting this technology and it's changing your life rapidly. Okay, not in 50 years or 20 years, but in, you know, less than 5 years, you're able to do things your parents and grandparents were never able to do. You're going to probably, and you're seeing, well, it's safe, you know, everybody's doing it, it's taking off. There's where the stickiness is. Okay. And so, you know, what does that mean in terms of exactly in an application of cybersecurity? Well, facial recognition is certainly there. Okay. Digital wallets are there. That's the second layer. So the access point is facial recognition. Then everything is kind of bound in the back end in terms of a super app being WeChat. So everything goes on in terms of back end integration to Bank of China, the major banks, through WeChat. Okay, we're not in the same region in the West. There's different schools of thought here. You know, can the West, America, Europe, develop a super app? You know, just talk about Twitter now with Elon Musk, you know, going into payments. My personal perspective and hypothesis is it won't happen in the West. We're too bound to individual experiences, you know, that's kind of fragmented with Amazon, okay, Facebook, better or worse, PayPal, so on and so forth. And it's been a fragmented estate. And, you know, we've had a different journey, okay, from an industrial economy to where we are now. Okay. So not quite the same thing. So I don't think it's going to be the same application, but I do think there is room, okay, to follow some pages from the lesson book there on how we can converge technologies to further accelerate, you know, and move forward. So
yeah, absolutely. I know there are lots of different things that happen in a different geographic environment, like you're saying. You know, WhatsApp is very popular in other countries. It is actually starting to take some hold in, you know, North America, which will be, you know, interesting to see, as you mentioned. But, you know, how can authentication identity solutions such as MFA and multi-factor authentication protect user information on top of that? You know, we mentioned there's biometrics, but that multi-factor authentication, when you're doing that, can actually protect a little deeper, I think. What are you guys' thoughts on that?
Yeah, I'll just close by saying it's a combination. I mean, my approach to technology as an architect, engineer, CIO, CTO, there's no shiny new toy in the toy box that's going to move the needle ahead. Okay, in any application, it's got to be a convergence. Okay, so I mentioned facial recognition. It's got to be that with a passcode. Okay, a hard wallet. Okay, you know, it's got to be a combination of technologies to be applied. Okay. Not one or another, but also back to my earlier answer, it's got to be contextual. It's not all or nothing. It really depends, and that's where the opportunity is. What are you trying to do, and how much money are you trying to move from source to target?
Exactly. Perfect. Wayne, you have any thoughts on the multi-factor authentication?
You know, I remember about 16, 17 years ago, I was a product manager for a large bank working on building digital solutions, and this came up. And we started, and through our compliance team, that we needed to make sure that our products, you know, had multi-factor authentication. Now, interestingly enough, it was necessary because at this particular point, even back then, you know, risk and threat of fraud and all of this was creeping up. So I would say this is very important. I think from a consumer's perspective, that this is something that they need to adopt it, and I think it should be required, mandatory, because at the end of the day, it's really going to provide another layer of security. So it's not just a matter of the fact of a customer opting out. It's not difficult in order for a consumer to opt into this, right? And realize the layer of protection that it gives you is very important, and I think just very necessary. So I would say that this is just reality, and needing this to be spread across products that consumers are dealing with. And if consumers resist, I think they need to just realize the benefits. That this is another step that's going to protect them and their assets.
Right. And, you know, we know that everyone has it. They'll have the different ways, right? They either always have their phone on them for texting. You know, they always have, you've always got access to your factor, the multiple factors. I mean, you always have access to it. So I think that's one of the things that it's naturally innate in us to carry these things around. So it shouldn't be intrusive, I think. But to that point, how can customer success and IT teams work together to ensure that fintech is a streamlined and secure activity? Because now we got the customer success involved.
So one of the things that I think, when I look at the customer and the IT relationship, usually there's some intermediaries that are involved. So I think of product and I think of sales. I think when it comes to a customer, what that product looks like for the end user has been developed internally by an organization through the product group, right? So whether it's the product group working very closely with their internal sales group in order to communicate the value of that particular product to the actual customer. I think IT works very closely with product to make sure that that product that's going to be developed, that's going to meet customer demand, as actually can be built with a stack that IT can provide their input to. So I think organizations have to have a very good communication flow, a very good culture within that organization that product is going to work with IT, work with sales to make sure that that end customer is going to have a good experience, and that's going to deliver the results based on what that niche is or that is needed in the industry. Working together as an organization could be very important. I know that in my product management days, I had to work very close with the IT group. So when I built the product and built the product requirements, if I didn't take IT into consideration, my product would not be successful. I worked very closely with the consumer, with a group of sales, the sales that knew what the consumer wanted, and been able to develop those solutions and custom that could fit that need. So I guess I've mentioned it. I think I've stated it in previous in this answering this question. It's really a whole strategy that includes all the stakeholders, so they can deliver that product that's going to be valuable to the customer, as well as meet the product needs, guidelines, take into consideration risk, compliance, audit. All of that's going to be necessary for a successful product.
Yeah, and I think one of you mentioned it earlier. It is that feedback loop also. When you mentioned having your teams actually reach out to the customers and get that feedback loop from them. I think that's also an important part of this, right?
Absolutely.
We're constantly evolving, the product, the solutions, and we always have to be listening for that. So I think that's a very, very important part of this. Before we end, I think, do you guys have any last words to fintech organizations who are looking to improve customer experience?
I think one of the things that working with fintechs today and the number of fintechs through the incubators and accelerators that we work with, many times fintechs are very strong about building a product that they think meets the demand in the marketplace. An opportunity exists to understand what the customer is looking for, what their challenges are, how this product is going to help them, and what way is it going to help them. Being an advocate for what that customer is, because you could build the best technology, but if it's not needed in the marketplace, if the customer doesn't understand how to use it, then that product is not going to be successful. So I think the communication strategy within the organization, especially on the fintech, on how they're engaging the customer, in what way they want to get input from the customer along the way, I think that's going to be very successful. And I know that as a product manager at a bank working with fintechs, we worked very closely to understand exactly what those products need to be in the marketplace and the value set before them.
Right. And, I want to say that sounds like a simple solution, right? Let's just ask the customer and listen to the customer. But the part I think people miss about that is the multi-generational aspect of that, and that every group has a different need and want in the marketplace. And I think it seems like this is just as easy as, hey, let's ask the customer. But now when you're talking about building a product for all of that different environment, I think it's a daunting task. And Bill, do you have any final thoughts?
Yeah, just to piggyback on some of the things that Wayne said, I mean, and, going back to the previous question too, and in the connection of the players from a stakeholder perspective, the traditional industry is looking at the customer based on their experience inside out. Okay. And connecting IT to product management and their perception of what's working and what's not working in customer experience. The fintech is looking at it, back to what I said a bit earlier, from a functional perspective in certain areas, and more or less taking an adversarial view against the traditional industry and saying, look, this isn't working for customers. We can do better. Okay. The opportunity is a great slide I always use that shows kind of collaboration business models between traditional banks and fintechs, building up a BI capability in-house. Okay, how can the bank partner more adequately, joint ventures in terms of fintechs to cover a problem area? Another innovative example is, credit and lending. Fintechs moving into cities or locales, disrupting the business models for the big banks, okay, for mortgages. Okay, well, a fintech can come in and say, let's develop a platform where you can cross-sell each of your products in a locale and fend off disruption. Never thought of before, can Bank of America and JPMC offer mortgages on one portal? What do you mean? I mean, normally we compete against each other, but if you look at the bigger picture, okay, you're fending off disruption. You already represent 2/3 of the pie. Okay, so how can you get more stickiness by collaborating with a fintech to develop that? Okay, so the collaboration aspect, and Wayne mentioned that, I think is of paramount importance to adopt more of an outside-in perspective. Okay, that's blended for both the traditional industry and fintechs as well.
I love that. Co-opetition at its best.
Yeah,
it's a great word. Well, I want to thank you for attending Preventing Fraud Without Compromising Customer Experience, and thank you to our panelists for sharing such valuable insights from their backgrounds. Please don't forget to visit our attachments section where you can learn more about securing CX and other industries. And thank you both for attending. I really appreciate it.
Thanks, you for having me.
Bye.